Great. Hi, everyone. My name's Cameron Stevens. I'm the financier of Prodigy Finance. We're about 110 people between London, New York, and Cape Town. We're trying to do two things which are quite ambitious. The first is disrupt how student finance is done, and the second is disrupt how banking is done globally. So that's an order of ambition. And what that means is what we have is a platform where international students are funded through a community of alumni, social impact, and other investors to attend the top universities. I'll talk a little bit about what that actually means and how we're going about that. So just sort of to step back as our use case, and this is one example from the thousands of people that we funded. You've got sort of the opposite of the problem that you have in the US, which is in student funding, you have too much money available for not the right things, compared to an international student who has very limited or in many cases no options whatsoever. So Orgil from Mongolia, one of the top in his country has been accepted to one of the top universities in the world and has absolutely no access to funding. And that's purely because of the structural reason that how banks today think about, and for the last 500 years, have thought about credit is that it's essentially localized. So when a bank is trying to assess you for risk, you're thinking about your credit profile locally, you're thinking about how do you trace and track someone, and as soon as you go across borders for that, the banking model falls down. So when Orgil is coming, in this case, to Columbia Business School, he can't get funding from a US bank because he has no credit profile in the US. The US bank is terrified he's going to move back to Mongolia or someone else, and he'll disappear from the system. And he can't get funding from his local bank in Mongolia because they don't have a program to fund even student loans generally, but particularly not student loans outside of your country. So you've got this issue which is affecting thousands and thousands of people, where you've got the best people from around the world who can't access the funding they need to go to these top institutions. So as we look at it, for international postgraduate students, so that's a student studying at postgraduate level outside of their home market, that's about sort of $25 billion a year in annual origination volume. So a really big problem, which is not being solved by the banks. For our student borrowers, about 80% of the borrowers have no alternative sources of funding. The majority of our students are coming from emerging markets, and I'll talk a little bit about that in a second. So what did we do? When we started back in 2007 and 8, fintech and edtech, for that matter, wasn't even a term. And we were coming into the financial crisis in 2007 and 8, trying to solve what was a problem then. What you've seen with a lot of kind of the fintech companies coming in is that they've reacted to the financial crisis in 7 when you had a withdrawal of banks from the sector. But this particular problem was one that existed pre the credit crisis. It wasn't driven by that. It's just fundamentally that banking has an issue internationally. So we said, well, who's going to understand this group of people, these borrowers and students who become borrowers from around the world going to a particular university? And our thought was, you've got a whole group of alumni who have money which is sitting in the banks earning very little yield or no interest. And we said to them, well, why don't you guys fund the next generation of students coming through? You're going to get a better return than you're going to get in the bank, having your money in the bank. You understand the risk inherently, maybe not from a kind of quantitative bank standpoint, but you understand what someone who's going to Harvard or Stanford or Oxford or whichever university, what their potential is. And you understand that you'll be able to take a very sort of calculated, measured risk in funding that person's future. For the schools, obviously, we're offering an option to be able to increase the diversity, to be able to offer funding sources to a whole group of students who do not have it. And for the students, this is generally their only source of funding, even though, as we said, they're a fantastic credit profile and a fantastic profile of student. To date, we funded just over about $310 million to students from 100 different countries. We have a repayment rate of more than 99%. So we proved out the thesis, which no one believed when we started in 2008, that that kid from Togo or Indonesia or South Africa going to one of these universities is going to repay the loan, and we proved that out as we went. And we have partnerships at 100 of the top global universities in the US, in Europe, and in Asia. But just sort of thinking about why does this work, and the other side of that, what is the issue here actually? So firstly, you're trying to do a few of the things that are very difficult for the banks. Firstly, you're trying to take someone and say, what is their future potential? How do we quantify that in thinking about what size a loan could be for that person? And it's not just a sort of fuzzy calculation. It's what is the person who's coming from X country to go to Stanford or Oxford, what are they going to be earning afterwards, and how do we make a decision based on their future earning potential? And so we built a model over the last decade, which we add data to obviously every year, to really assess what someone's future earning potential is. So we can give them a loan that doesn't indebt them too much that they're not going to be able to afford, but also gives them sufficient amount to be able to attend the university. The second issue, and what you're trying to solve with that, is really someone's ability to repay a loan. The second piece is then thinking about the borderless model. These are people that are moving around the world, despite some of the world leaders' best efforts to rein that in this year in the US, or last year, and in Europe increasingly. These are people that are moving around the world. The banking model for the last 200 years, Barclays today in London, if you try to take a personal loan from Barclays, is going to look at you and say, where do you live today? And if you moved one street across in London 6 months ago, that's going to flag on your bureau report. That's mobility for a bank in 2017. The thought of someone moving back to Indonesia or to Singapore is terrifying for a bank. For us, it's completely irrelevant. The person's still on their social network, they're still on LinkedIn, they're still on Facebook. We don't care if they move back to Singapore or Togo or South Africa. For us, really, finance needs to move borderless. And if you can build a platform from scratch to think about that, you need to solve the issues around, well, how do you think about tracing that person when they move back? How do you think about collections? How do you actually make a payment from Singapore on a monthly basis in a way that's cost efficient and cost effective? And then how do you think about enforcing a loan in the time when there is an issue, that you have a contract that is enforceable? So just sort of rounding up quickly, really what we believe is that by empowering the best of the best from around the world with the funding that they need to attend the top universities, most of our students return home to their home country or region after graduating, which we like. You're developing people, giving them a network, and then having them return to their home country. You have a lot of benefits for their country and for the country that they've been studying in. And really, we are about funding the brightest minds from around the world and saying, you know what, funding shouldn't be the roadblock. If you're getting into one of these top universities, we'll take care of the funding and you take care of the rest. Thank you very much.